Hello there, welcome to this edition of Global Business Africa. In the course of the hour, we'll run through the business news stories you need to know about from the continent and beyond. But first, let's start with a run through the market. So the largest listed media firm in East Africa, that's Nation Media Group, started its share buyback program today. It's the first, in fact, that's been carried out in Nairobi. It got approval to do so from shareholders last week. The window for buying back 10% of its outstanding shares ends in September. It was the second most traded stock in the market today. It closed 8.5% higher. Despite Naspers going up by nearly 1.8% today, the all share in South Africa started Monday on the back foot. It shared about 0.6% in Monday trading. Here's what's coming up tonight. Tanzania to study cryptocurrencies as it readies to adopt them. South Africa reimposes a total ban on alcohol sales as coronavirus infections surge. And smallholder farmers in Nigeria turn to advanced techniques in order to sustain their food output. Our starting point tonight is Tanzania. A couple of stories coming out of the East African economy. Let's start with the one on cryptocurrencies. The country's president, Samia Suluhu Hassan, sees a future where cryptocurrencies are part and parcel of the country's broader economy. And she's telling the country's financial chiefs to prepare for change. Here's CGTN's Isaac Lucando starting us off at this hour.
Cryptocurrency trader Kabenda Balete is relieved that his favorite activity is now recognized by the government. He says from 2016, when he started trading, at least $22 million have already been transacted in Tanzania. Cryptocurrency, he believes, has been life-changing for many young people in the country.
If you tell them you have to be employed, they won't understand you because they know they are getting something they want from cryptocurrency. So there's a lot of benefits, but if you take time and learn. If you don't want to learn, then you lose money.
While the exact number of cryptocurrency traders in the country is unknown, some estimate it could be in the thousands. The country's president is asking financial experts to explore the potential benefits and pitfalls of cryptocurrency.
It's important that we work on these developments. We must be ready. When these changes come, they should not catch us off guard because we might feel we are not ready, but we may very well be overtaken by our own citizens.
The adoption of blockchain technology, the platform on which cryptocurrencies are traded, is on the rise globally. What makes the technology attractive is its perceived safety, enabling individuals and businesses to carry out digital transactions on a secure platform at a much faster rate. Africa is the second continent globally in terms of cryptocurrency adoption, particularly in peer-to-peer trading. Lack of access to traditional banking systems has made it easier for people in Africa to accept mobile money, and now cryptocurrencies. While no regulation on cryptocurrency exists, the Central Bank of Tanzania says it has already begun working on it. Sandra Chogo, author and developer of a blockchain technology curriculum for Tanzania's public accountants, says with over 4,000 cryptocurrencies in existence, regulation is a must.
There are some fake cryptocurrencies out there. You might think you've bought into a good one and expect it to increase in value, but it could turn out to be fake. Many end up losing even the capital they've invested.
Tanzania adopting cryptocurrency as legal tender in the purchase of goods and services may be a long way off. In the meantime, the government is hoping to lay the foundation for smooth transactions in the future. Isaac Lucando, CGTN, Dar es Salaam.
Now, we're still in the country. Tanzania's government has restarted talks, apparently, aimed at reviving the Bagamoyo port construction project. The country's president, Samia Suluhu Hassan, adds that the national interest will be the priority as these talks continue. This comes after the project, which is estimated to cost at least $10 billion, was suspended back in 2016 by the then president, John Magufuli. All right, then, so what exactly has changed? Let's explore that in some detail with Daniel Kijo. He joins us live from the city that, of course, is home to Tanzania's main maritime gateway, Dar es Salaam. Daniel, good to see you. So let's start with some context here. Tanzania already has the port of Dar es Salaam. So what's the rationale for spending even more money building another port in Bagamoyo instead of just expanding the existing one in Dar?
Hi, Ramah. Thank you so much for having me. And you talked about context. Let me just give you a bit of distance from Dar es Salaam to Bagamoyo. It is about 75 kilometers from Dar es Salaam. So these ports are about less than 100 kilometers apart. But we know that, like you touched on, President Samia has assured citizens that while the government is looking to set up this plan, it will make sure that the interest, national interest, will be considered. We know that experts and officials in government feel that there's not enough space for the further expansion of the Dar es Salaam port, that it is about high time the Tanzanian government revives the Bagamoyo port project. Because in Dar es Salaam port, we have about, it will reach its limit when it hits its quay size of about 2,600 meters. The president also says that she has had meetings recently with the investor, and the government aims to do its part, but also wants to ensure that the investor will do its part. This project, Ramah, was to be done by China Merchants Holding International before, and again, like you touched on, at about $10 billion. So it's a huge project for East Africa. It would be, once completed, the largest port in the East African region, and it would add up now into the number of ports that Tanzania has into 5. There's one that sometimes people forget, the Kilwa port, but again, there's also obviously the big one we know, the Dar es Salaam port, the Tanga port, and the Mtwara port. So this Bagamoyo port would be the 5th one. But also, the tone of President Samia's government has been, in fact, we're at the presidential briefing today, the tone has been of opening up Tanzania for trade, for investors, and to sort of make it a trade and sort of industrial hub. Now, having an extra port will not, that would work with the Dar es Salaam port to ensure that goods and services can be cleared, exported, and goods being imported can be cleared in a speedy way, does not hurt. She also touched on making sure that these 2 ports are linked to the SGR and Tazara railway, Tazara going all the way to Zambia, and obviously the SGR into the inner parts of East Africa to service countries like the DRC and others. So this could be a strategic move to try and make sure that they perhaps talk to investors, make sure that the clauses that the government was concerned about are sorted, but indeed to ensure they add the horsepower of ports to Tanzania's capacity.
Indeed, of course, cure the competition that's going to come up between Mombasa and Dar and eventually Bagamoyo. But one of the key issues that the then President, John Magufuli had raised in objections to the project when he cancelled it back in 2016 was, among other things, a demand that the country apparently can't develop other ocean-facing ports. What's the current position of the current administration on that issue?
Well, Ramah, clearly we see now, based on my first answer, this is not the case. President Samia is looking to, like we touched on, she's already in talks to revive the project, which is, of course, this port will face the Indian Ocean. So she seems to feel that it is important to add this port. Now, we know, as you touched on, the former president had accused the Chinese project investors of many things, generally saying that the terms were exploitive, in exchange for the financing that they would get. He touched on many issues about the tough conditions, owning land, tax and tax issues, and many other things that he was not happy about. But President Samia now is coming in and saying that all these terms, all these issues that the former president had raised will be touched on, and will be resolved, will be discussed with the aim to mutually move forward to ensure that Tanzania improves its ability to clear goods and also be able to increase exports and imports by using this port. So it seems that the government now has, if indeed, changed tunes after a new leader has come at the helm, but they are looking to make sure that this port is completed and done. So exactly how long and if they will indeed use the same investors from beginning, that is yet to be revealed.
Indeed. It's going to be interesting to see all the details coming out of those negotiations. Daniel Kijo there live in Dar es Salaam. Thank you. Now, high inflation driven by soaring food prices has driven 7 million Nigerians deeper and deeper into poverty. That's according to a new report by the World Bank. Africa's largest economy is struggling to contain sky-high inflation months after recovering from recession, partly caused by the COVID-19 pandemic and a steep decline in crude oil prices. Here's Phili Haza with this report from Abuja.
This market is normally one of Abuja's go-tos for cheap foodstuffs, but that has changed over recent weeks. Some shoppers here say the hike in food prices has gone to absurd levels.
I came to the market with a budget to buy some foodstuff that lasts me for a month. But funny enough, I could not even get enough. And it's so sad, it's so heartbreaking right now.
The hike, more than 100% of what we used to buy, it's really ridiculous. Everything is high. the meat, egg was usually 1,900. Now we're buying for 1,500. I really don't know. I don't know how we want to survive.
About 41% of the 200 million Nigerians live in poverty, and that figure is now worsening. The World Bank reports of 7 million more people slipping into poverty due to inflation. In February, the country recovered from a recession it slipped into last year due to impacts from the coronavirus and global fall in oil prices. Yet, Nigeria's economy is import-driven, meaning the country exchanges its naira for foreign currencies like the dollar to ship in products needed for consumption.
One of the major causes of inflation is our exchange rate. Imagine some years back that dollar was 160 something and 170. If you bring in good that period, it is in that comparison that the price of your good is. Now, dollar is what? Dollar is around almost call it 480 something. That's even official. If you go to unofficial, you get it worse. And by the time you bring in good, imagine how much it's going to be. Our inflation is not basically the COVID. COVID could be a part of it.
The country's Bureau of Statistics says the inflation rate is currently 17.9%, up from 12.4% the same period last year, with food prices accounting for over 60% of the total increase in inflation. Experts say until the country focuses more on producing enough food to feed its population and then ramp up exports, the inflation problem will continue to linger.
In order to drive down inflation, there must be economic activities. You must produce goods and services. And such goods and services have to sell in both local and international markets. We should look at agriculture. Agriculture gives the economy a base. That's why we say that agriculture is the mainstay of most economies in the world.
President Muhammadu Buhari has pledged to tackle rising inflation problems in the country while instructing the central bank not to give any money for food importation, rather issue more credit facilities to local farmers and food processors.
It's not clear how long the initiatives of the government will have a direct impact on the prices of foods at the markets, but the hope is that with such efforts, the inflation rates will be brought down to a barest minimum.
That could mean that more consumers can increase their buying power and avoid living below the poverty line of $1.90 per day. Phil Ihaza, CGTN, Abuja.
Welcome back. So let's head over to corporate headlines. Kenya's Capital Markets Authority has issued the first set of licenses to 5 coffee brokers to take effect on the 1st of July. And those licenses will allow the brokers to carry out the role of coffee brokerage services at the Nairobi Coffee Exchange, expected to come into full compliance with the requirements of the exchange regulations within the next 3 months. Still in Kenya, the telecommunications firm Safaricom will maintain a dividend policy of paying out 80% of its net earnings. A consortium majority controlled by Safaricom pledged to invest $8.5 billion in the network in Ethiopia over the next 10 years, including the $850 million they paid for the license fee. That raised analysts' fears that Safaricom may end up cutting dividends in order to fund the Ethiopia operations through a mix of debt and internally generated revenues. The aerospace firm TAL has appointed Gregory Linney as the vice president for Africa. He'll be responsible for the strategic growth of the firm in Africa across all markets, with a clear focus on leveraging local partnerships and digital transformation. Prior to his appointment, Linney was the chief operating officer of TAL for Africa, the Middle East and Western Asia, and that includes coverage of Saudi Arabia and India as well. And finally, United Airlines is finalizing a plane order worth some $30 billion. That order could include up to 200 Boeing 737 MAX aircraft and some 70 Airbus A321neos. The deal would be the industry's largest since the coronavirus pandemic pummeled air traffic and airline balance sheets, eclipsing recent orders for more than 100 737 MAX aircraft from Southwest Airlines. That's a run through your company headlines. You're watching Global Business. Time for a short break. Here's what's coming up next. South Africa places a total ban on alcohol sales and travel as it battles a third wave of COVID infections. And the world has more than enough renewable energy to comfortably transition away from fossil fuels. But how do we get there? We'll explore that next. Every story starts out like this.
Okay. We'll head up now.
But beyond the rush of the numbers, there's always a more fundamental question. What happened? Who has been affected? When market-moving decisions are made, who's responsible and why?
Let's get some reaction on ground. Joining us in Johannesburg is Central Nairobi. Hello, Nairobi.
This is how all stories begin. See how they end. Only on Global Business. Welcome back to the program. The South African government has once again imposed a total prohibition on alcohol sales, a travel ban and an earlier curfew as the country struggles against a third wave of COVID infections. South Africa on Sunday reported over 15,000 new COVID-19 cases. Yolisa Njamela takes up the story.
This past weekend, the South African government confirmed that the highly infectious Delta variant of COVID-19 is behind the current surge in new cases in the country. The variant was first detected in India and is rapidly becoming the dominant one in South Africa. President Cyril Ramaphosa has announced new restrictions in an effort to contain the massive surge in infections and relieve pressure on the healthcare sector. In a televised national address, the president confirmed that the Delta variant is fast spreading through the country.
The evidence we have is that the Delta variant is rapidly displacing the Beta variant, which has been dominant in our country until now. We are concerned about the rapid spread of this variant. Firstly, because it is more transmissible than previously circulating viruses, meaning that it is easier to catch this virus through person-to-person contact. It is thought to be twice as contagious, that is transmissible, as the earlier variants. Secondly, because it is more contagious, it can infect far more people.
South Africa is currently gripped by a third COVID-19 wave. Some of the restrictions reimposed by the government include a total ban on alcohol sales.
Our Ministerial Advisory Committee has advised that the limited restrictions that we previously imposed were not that effective, and that a prohibition will ease the pressure that is placed on hospital services by alcohol-related emergency incidents.
In addition to the alcohol ban, all restaurants have been ordered to close. They may only provide takeaway meals and deliveries. Curfew has been extended. It will now be from 9 p.m. to 4 a.m. All indoor and outdoor gatherings are prohibited, and travel in and out of Gauteng province is also prohibited for leisure purposes. Gauteng is the worst affected province.
Gauteng now accounts for more than 60% of new cases in the country. With the exceptions of the Northern Cape and the Free State, infections are rising rapidly in all other provinces. What we are seeing is that the existing containment measures in place are not enough to cope with the speed and the scale of the infections.
The impact of these interventions will be assessed in 14 days to determine whether they should be maintained or adjusted. Meanwhile, the president also announced that nearly 2.7 million people in South Africa have received a vaccine dose thus far. Yolisa Njamela for CGTN in Johannesburg, South Africa.
Onto the world of energy now. The world apparently has more than enough renewable energy potential, everything from solar to wind to hydro, you name it. in order to make the transition away from fossil fuels. That, at least, is the assessment from the University of Tech in Sydney. Now, according to their analysis, even if no new fossil fuel projects were built from today, carbon emissions from existing projects are still far too high to stay the course towards meeting the goals of the Paris Agreement. It also shows that this transition is not only required, but completely feasible. In fact, all regions have enough renewable energy sources to provide energy access to all using existing tech, according to the report's authors. Now, this suggests that it's possible to meet the twin challenges of both phasing out fossil fuels, but also increasing electricity access at the speed required through scaling up a lot more renewable energy supply. All right, then, so let's explore this topic in a bit more detail. Landry Ninteretse is the Africa Regional Director at 350.org. He joins us now from Uppsala in Sweden to explore this topic in a bit more detail. Landry, some will look at this report and say, look, that this radical shift away from fossil fuels just can't happen in Africa. They would argue that we need a more pragmatic approach that addresses energy security, economic needs, and the question of affordability across the continent. What would you say to those critics?
Yeah, good evening, and thank you for having me. First of all, it's important to know and to say that the shift to renewable energy, as an alternative, cleaner source of energy is possible, right? And as you said rightly, it requires some pragmatic, rapid, and ambitious plans that address not only the economic and energy needs of the African population, but also the social needs of Africans. So renewables such as solar, wind, small hydros produce less, if not zero emissions, and can be implemented without needing to connect to the national grid in rural areas, places where communities badly need energy. So just to say that renewable energy, which is just, equitable, in form and output, has the potential to unlock African potential citizen and their ability to work and deepen livelihood and advance well-being, as well as supporting a home-grade development agenda, which is set on African terms.
But where then does that leave countries like Tunisia, where, for example, I believe 97% of their power comes in from natural gas, or South Africa, where at least 90% of their generation capacity is based entirely around coal? Because collectively, African economies don't produce as much emissions as, say, Western Europe, the United States, or China for that matter. Isn't there an argument for a slightly slower phasing out of fossil fuels?
I do believe so, because as you rightly say, countries like Tunisia or Togo or Burundi don't kind of emit the same amount of emissions as China is the US. So definitely some countries, especially in the global north, those who are part of the G7 bloc, will have to do more because they have contributed disproportionately to the global warming. And because of that, they have a responsibility to remedy the crisis and the situation. At the same time, African countries in majority, they need support and help from the developed world to enact and implement the right transition needed for them to low down the consumption of fossil fuels and emissions in order to accelerate and implement a new energy models which will help the continent to advance its development agenda without necessarily contributing or adding more emission than it is at the moment. So definitely the two blocks, the two worlds are not in the same basket. There are those who have to do more and those who need assistance and to be accompanied in the process and in the transition phase.
But who's going to pay for this? Because some of the numbers being thrown out here, as far as cost estimates, are at least $150 billion a year just to make the energy mix, the generation mix across Africa compatible with that target of keeping warming down to 1.5 degrees centigrade. So yes, we have all this renewable potential. You've got enormous projects like a Grand Inga in the DRC, which would solve a lot of our power issues. You've got a lot of untapped solar capacity in the Sahara Desert. But it still comes back down to the question of money. Who's going to pay for this at a time when all of these Western economies, the ones you've mentioned, have not even lived up to their pledge of providing $100 billion a year in funding to enable that transition, which was made much, much earlier?
Mm-hmm. Yeah, I remember that when that commitment was made back in 2009 at the Copenhagen summit, committed to provide $100 billion to advance and address the crisis. So I think the pressure is still needed. I mean, the issue of money is definitely at the center of the debate. And again, as I said, it's the responsibility of the developed world to fund and put the money on the table and to honor not only the previous commitment, including those that were recently made, in order to meet the cost of adaptation and mitigation. Because when you look at most of African countries, they are not in a position to acquire and enact the change which is required. That's why we say those that have contributed mostly to the global warming has a historic responsibility to fund the transition and to accelerate the change that we'd like to see happening in most of African contexts. So it is imperative that the G7, for instance, invest in shifting their economies away from a dependence of fossil fuels, at the same time help African countries to put in place and implement adaptation and mitigation strategies and plans that address the triple areas that I mentioned: economy, the energy, and also the social needs.
But, I mean, ultimately, Landry, since we've been talking about this since 2009, the G7 countries haven't lived up to their obligations, and they clearly won't if their history is anything to go by. Isn't this something that African countries should be working on doing by themselves?
Yes, they are definitely. They have a role to play as well. So it shouldn't be left to the developed world only to finance the transition and the change which is required. So it's a collective responsibility, but again, as I said, it's also a differentiated responsibility. So African countries have also resources and other means to fund and advocate for that just transition, which we are talking about here. So at the same time, the support and due to the principle of damage and loss, we believe that those who have made most of the damage have a responsibility to fund and help those who are in need, because it's unfair for a continent like ours to be struggling to survive every time there is first a cyclone or there is another dramatic situation which is caused by the situation where they are not responsible. So yes, definitely there is a responsibility of African government and African civil society, private sector. At the same time, there is also another big responsibility of the countries that have caused the climate crisis we are in.
All right, Landry Ninterete from 350.org is the Africa Regional Director, joining us from Uppsala in Sweden. Now, close to a dozen African ministers have been meeting in Tunisia to look for ways of boosting trade ties between the North and Sub-Saharan Africa. As RussiaChina reports, the conference has also offered an opportunity for the private sector to augment its network following the creation of the Continental Free Trade Area.
Experts at Tunisia's fourth Financing, Investment and Trade in Africa conference discussed several topics, including the financial support in the continent, the major structuring themes for African economies, and the establishment of the African Continental Free Trade Area. Officials also shed light on the business environment, sectoral development strategies, as well as local transformation and industrialization in Africa.
This conference, the fourth edition, is becoming a real big conference in Africa, and the purpose of this conference is to make meeting between businessmen and business from Tunisia and from around Africa, and also the presence of international institution and financial institution is to found the possibility, the solution for financing our trade and our investment in Africa.
Ivorian Minister of State, Minister of Foreign Affairs, African Integration and Diaspora urged Tunisian firms to invest in her country in raw material processing. Kandia Camara also called on Ivorian businessmen to invest in Tunisia as part of a win-win partnership.
Côte d'Ivoire decided to restructure its economy with focus on raw material processing. We call on Tunisian businessmen to come to help us process our raw materials. This will pave the way for the structural transformation of the economy.
The Minister of Youth, Entrepreneurship Promotion and Employment of Burkina Faso said the meeting in Tunis is highly important as it will foster the exchange of good practices and experiences in entrepreneurship and job generation.
Nous avons donc au niveau du Burkina Faso
in Burkina Faso, there are 150,000 to 200,000 job seekers each year, and the only solution is to encourage them to create their own startups and projects, considering that the current employment mechanisms cannot meet all needs.
The Tunisian president met with the African ministers who took part in the 4th edition of the International Conference on Financing Investment and Trade in Africa. Qais Said stressed the need to ensure optimal exploitation of natural and human resources available in Africa as part of a new development model.
Experts called for setting up a platform in Tunisia to facilitate trade between North Africa and Sub-Saharan Africa. In addition, African officials and ministers urged decision makers to create a continental free trade area. Aden Shawishi, CGTN, Tunis.
You're watching Global Business Africa. Time for a short break. Here's what's coming up next. China and Russia agreed to extend their treaty of good neighborliness and cooperation. And the Mobile World Congress opens in Barcelona. We'll take you inside next.
No one again, he can hold in guns. Machine guns from police forces towards the protesters.
Were you worried about your life at that particular time?
Not at all.
Thank you very much for your time. What is your assessment of the state of the continent today?
Africa has the potential to power itself.
Excuse me.
Welcome back to the program. Let's recap some of the headlines coming your way at this hour. Weeks after Boko Haram, the militant group, confirmed the death of its former leader, Abubakar Shekau, a group of fighters from that Islamist group is now pledged allegiance to its rival, the Islamic State West African Province, or ISWAP as it's more commonly known. The message was in a video released by this group of fighters. It was produced by Islamic State's official media arm. In East Africa, Uganda's President Yoweri Kaguta Museveni has called developing nations with access to vaccines, or developed nations rather, with access to vaccines as selfish. This comes as the country continues to struggle with a surge in new COVID-19 cases. Mr. Museveni was speaking at the opening of the World Health Summit in Kampala on Sunday. Tunisia's Navy has rescued 276 irregular migrants, mostly from Bangladesh, near its coastline of Benguerdan. It's also saved 178 undocumented migrants from African and Asian countries, also elsewhere along its coastline. That said, dozens have been reported dead or missing during these recent attempts to cross the Mediterranean Sea in order to get into continental Europe. And a team of 8 Egyptian architects have won an international competition for the reconstruction of the historic Al-Nouri Mosque complex in Mosul, Iraq. It's a major component of UNESCO's ambitious project to rehabilitate that ancient city. Large parts of Mosul are still in ruins, years after it was liberated from the jihadist group Islamic State. That's a run through your headlines. Now, China and Russia have agreed to extend their treaty of good neighborliness and friendly cooperation. The announcement came as China's President Xi Jinping and the Russian head of state Vladimir Putin spoke via video link. President Xi said the treaty is an example of building a new type of international relations and a community with a shared future for mankind. He said China and Russia have been working closely in international affairs and they are defenders of multilateralism and justice. President Putin said the treaty has brought bilateral relations to an unprecedented level. He also offered his congratulations on the centenary of the founding of the Communist Party of China. He expressed his willingness to strengthen cooperation with the CPC. They also discussed the U.S. plan to withdraw troops from Afghanistan and stressed joint efforts to safeguard regional peace and stability. Now, Russia, of course, has been deepening its cooperation, its economic cooperation, particularly in China, in a range of issues, with projects ranging from food to tech to energy. Here's some simple examples. Back in April, Russia announced plans to build a transfer station on both countries' borders to export grains to China. The overall investment of this project is roughly 570 million yuan. China is also the largest importer of Russian meat. According to Agro Exports, that's a division of Russia's Agriculture Ministry, Russian beef exported to China went up by a factor of 4.5 year-on-year in 2020. In aviation, China is jointly developing a wide-body airliner with Russia, the CR929. It's aimed directly at the 787 Dreamliner made by Boeing and essentially by extension Airbus's A350. Last but not least, Russia is also China's important partner in energy imports. The China-Russia East gas pipeline started operating in 2019. It's now moving nearly 19 billion cubic meters of natural gas every year. Now, still on China-Russia ties, trade volumes between the two nations have been increasing at a fairly decent speed. Exports to China of Russian beef, milk and chocolate surged rapidly after the pandemic. Among the reasons, shared land borders, expanding rail connections and trading in their currencies. CGTN's Alyosha Milenkovic has a report.
This is Russia's prime quality Angus beef, packed, stacked and kept in a cold environment in this storage facility in Moscow, ready to be shipped to China. It is produced in Voronezh, some 500 kilometers south of Moscow, in an eco-clean and pristine environment. In the middle of a rampaging epidemic, the company that produces these prime steaks started exports to China.
Our processing capacity is 40,000 tons per year, and our expectations for this year are to export around 2,500 tons. And if we are looking forward to the next year, those figures could be better, depending on how the Chinese market accepts our products.
This isn't the only example of a Russian company which has started exporting to China. Most of those new exporters focus on agricultural products, which Russia is producing more and more of. As a result of this increased interest in China's market, agricultural exports from Russia rose by 17.6% in the first quarter of this year alone. And last year, Russian beef exports to China just exploded with a 25-fold increase.
Trade volume is increasing at a cosmic-like speed compared with last year, or even until the coronavirus pandemic started. It's like the sky and the earth. It's being seen even in areas with more exporting difficulties due to laws and regulations, like meat and milk exports.
Exporters of other food products like chocolate and candy have far fewer regulatory hurdles for exporting to China, and they are using those opportunities. Overall trade between China and Russia in 2020 reached just over 107 billion US dollars, and 25% of that figure was traded in the national currencies. The pandemic just sped up both processes, which will have a massive positive impact on their economies at the end of the day. Alyosha Milenkovic, CGTN, St. Petersburg.
Let's get back to the business of clean energy. The world's second largest hydroelectric power station after the Three Gorges Dam has started operations in southwestern China. President Xi Jinping sent a congratulatory letter as to the operational units at the Baihetan Dam went online. He described the project as being technically challenging, but he stressed its importance in getting power from the relatively less developed western part of China to the highly industrialized east. He also highlighted its role in helping the country achieve its targets to peak CO2 emissions and eventually achieve carbon neutrality. Dai Kai tells us more from the Liangshan-Yi Autonomous Prefecture in Sichuan province.
This hydropower station right here behind me is currently the world's second largest, and on top of the list, of course, is the Three Gorges Dam in central China's Hubei province. And the Baihetan Dam currently has a capacity of 16 million kilowatts and is able to generate more than 62 billion kilowatt hours of electricity a year. And it's worth mentioning that the dam is equipped with the world's first 1 million kilowatt power units. And I have to say that those units are 100% domestically designed, manufactured, and installed in China, which is why the engineers in charge of the construction have been saying that this level of achievement, it's enough to put China to the top of the Mount Chomolungma in terms of the hydropower equipment manufacturing. And the Baihetan Dam officially goes into operation and start generating power from today. And of course, we're only talking about the first batch of power units going into service, and they are unit number 1 on the left bank and number 14 on the right. As one of China's major projects for transferring power generated in western regions to the east, the power generated by the first batch of power units this time around will mainly go to the eastern provinces of Jiangsu and Zhejiang, about 2,000 kilometers away from the dam. And for the station to run at full capacity, we'll have to wait till this time next year. And by then, the dam's total generating capacity in a single day will be enough to meet the electricity consumption needs of 15 million people. Well, the dam here is meant to be part of the world's largest new energy corridor, and when it goes fully operational, it's going to be able to reduce carbon dioxide emission by more than 50 million tons each year. And that's definitely going to be a big step up for China to peak its carbon emissions and reach carbon neutrality by the middle of the century. Bekai CGTN, Liangshan, the Autonomous Prefecture, Sichuan Province.
On to New Zealand now. It's in the middle of a housing boom that has seen real estate prices skyrocket. In some cases, they've gone up by more than 30% over the last year. And that's despite government attempts to try and cool the market down. In the largest city of Auckland, for example, the average sale price has gone above $1 million for the first time on record. And that's making it one of the least affordable cities on the planet.
All over Auckland, new apartments and houses are being built at the fastest rate since the 1940s boom that followed World War II.
Housing construction in New Zealand is booming, but it hasn't boomed by enough just yet to address the housing shortage that has built up in New Zealand over the past 5 years or so.
And the demand for existing homes is even stronger. Over the past year, the median sale price across New Zealand rose by 32%. To a record high of $820,000.
750 go 5 again, 750 to bid.
In New Zealand, most homes are sold to the highest bidder at auctions, where many anxious buyers have spent months looking to buy their first home.
Going, sure, done, finished, sold. Over here,
The happy couple ended up paying $776,000, which is now a bargain in Auckland.
Well, these guys got a great deal. I mean, average prices in Auckland set at $1 million. So, you know, it's really hard to find properties that are under the $800,000 mark.
Record low interest rates and a shortage of homes for sale have been key factors in driving prices higher. And so has a phenomenon known as FOMO, the fear of missing out.
People are aware that prices are going to continue rising, so they want to get into the market before they're hit by further price rises.
Auckland was recently named as the world's most livable city, but when it comes to the cost of housing, Auckland ranks as the 4th least affordable city on the planet, behind Hong Kong, Vancouver and Sydney, and that's despite repeated government measures to cool the market. A series of lending restrictions and tax changes have been introduced to deter speculators and investors, but prices are still going up, not down.
It's going to take 6 to 12 months for the housing market to cool that head of steam that's being built up, but we do think price growth will slow down over the coming 12 months.
A shortage of building materials is also pushing up the cost of new builds, and while some say it's a bubble waiting to burst, there's no end in sight to this boom.
Given the fact that we've got this overall lack of supply and lack of inventory, it's our view that price rises will continue.
And if interest rates go up as expected, this couple could spend a potential lifetime paying off their bank loan. Owen Poland, CGTN, Auckland.
Mobile World Congress 2021 is kicked off in Barcelona in Spain under some pretty thorough pandemic control measures. In order to prevent touching badges, people attending the fair have to use a QR code or biometric face recognition system in order to identify themselves as they get in. This event is essentially the first big tech conference to be staged in continental Europe since the pandemic started. The organisers, the GSM Association, do hope that the number of attendees will range anywhere between 30,000 to 40,000. Before the pandemic, if you all remember that, back in 2019, the event was attended by at least 100,000 people. That was estimated to give Barcelona a $500 million boost by spending. On to China about the numbers now, and look at the country's automobile market. It now accounts for roughly 30% of global share. Passenger cars are now the most common mode of transportation in China. Here's a look at the factors that have driven this growth over the years on What's Hot tonight.
Cars are perhaps one of the most common modes of transportation in China today. But a century ago, when the Communist Party of China was founded, passenger cars were uncommon. In 1937, the number of passenger cars across the country was 24,000, a huge gap compared to other countries at the time. Meanwhile, none of the cars were self-designed or self-made. When the People's Republic of China was founded in 1949, the number of passenger cars was just 50,000. It wasn't until 1958 when China's first domestically developed sedan rolled off the production line. But achieving mass production was still a long way off. In 1965, China's annual production of automobiles was over 40,000. That number increased 4 times in 15 years, reaching over 200,000 in 1980. As China started its reform and opening up, the automotive industry became more diverse. The first automaking joint venture between China and American Motors Corporation was established in 1984. It was called Beijing Jeep Corporation. Later, more joint venture car companies were founded. Partners were some famous car producers, including Volkswagen from Germany and Peugeot from France. China produced 2 million vehicles in year 2000, ranking 8th in the world. And in 2009, China became the largest producer of automobiles, making more than the US and Japan combined. In 2019, that number reached over 25 million, 2 times that of the US. In return, the development of automobile production has helped boost the car market. The market scale grew from only 2 million in year 2000 to 13 million in 2009, making China's auto market the largest in the world. In 2020, China's car market accounted for over 30% of the global market. And China has been the largest single market for many global brands, including Daimler-Benz, Volkswagen, and Nissan. Now, with the need for green development, new energy vehicles have been emerging. Over a decade ago, China's market scale was only 8,000 a year, but in 2020, it jumped to over 1.3 million, 3/4 of which were Chinese or joint venture brands. The total number of new energy vehicles in China reached nearly 5 billion last year, taking up over 40% of the world's total. Looking forward, China seeks to further develop the market, aiming to make new energy vehicles account for 20% of its overall auto sales by 2025.
All right, then, no new energy, essentially electric vehicles in this particular segment, but let's run through commodities. Coffee contracts in New York are starting point. They're having a strong start for the week, up at least 3.5% at 1710 GMT, 162.95 on the contract price. Now, it's close to the year's peak of 164.30 so far. Spot gold prices have remained relatively steady and range-bound between 1770 and 1790 an ounce since the 17th of June. The next big move, though, may come after the US jobs data comes out this Friday. Brent, on the other hand, that's moved decisively higher for most of June. It's gone as high as 76.40 a barrel, but it's pulled back to the mid-74 range today. Now, whether or not that's more to expectations that OPEC will agree to raise supply this week or in response to the demand destruction we're seeing from a rise in COVID cases around the world, that's still up for debate. But those are your commodity prices. Here's what's coming up next. Hydroponic farming gains ground in Nigeria as smallholder farmers turn to new techniques.
Africa is a continent of diversity, with varied climates and enchanting geography, and a people so distinct, but with a shared enduring spirit. We are at the heart of the continent to bring you the untold stories.
Let's have a look.
We celebrate Africa as it shapes its own destiny.
Tunis,
Syria, Juba, Johannesburg, Ethiopia,
Tanzania. Africa Live. Find your voice.
Welcome back to the program. Let's head over to Nigeria. Militants in the oil-rich Niger Delta part of the country have issued fresh warnings to the federal government. The Niger Delta Avengers, as they call themselves, are threatening to resume attacks on critical oil and gas infrastructure in the region over what they say has been repeated neglect of the region by authorities. Here's CGTN's Deji Badmus with that story.
In 2016, the Niger Delta Avengers dealt a serious blow to Nigeria's economy. The militant group carried out over 40 attacks on oil and gas facilities across Nigeria's oil-rich Niger Delta region in what it termed Operation Red Economy. The attacks cut Nigeria's oil production by almost a half and threw the economy into a financial tailspin.
When you look at it as we speak today, even the OPEC quota for Nigeria has been cut short by close to probably 300 to 400,000 barrels of crude oil production per day. So we are even producing much, much less. And we needed to produce more to be able to meet up with our budget projections and to be able to take advantage of the current price of crude oil internationally, which is almost above $70 per barrel.
Almost 4 years on, they are now threatening to launch what they term Operation Humble, targeting oil and gas facilities and local politicians in the region. The group says the government has failed to meet their previous demands to address development challenges, particularly caused by oil spillage in the area.
One fundamental thing that is clear is this: Niger Delta environments require attention. I want to believe that the government is going to listen to them. Fortunately for us, the Minister of State for Petroleum is a Niger Delta citizen and a loyal citizen of Nigeria. He will not do anything against the Niger Deltans. So they should look for a way of having a kind of discussions with him.
Investments in Nigeria's oil and gas industry have been heavily impacted by security challenges.
There was a time that Nigeria used to have more than 40 to 50 active drilling rigs. As we speak today, we have less than 10 active drilling rigs, which is not good. And if they carry out that threat, the few investors that have been able to keep the loyalty with the Nigerian nation and are still investing in the Niger Delta are likely to run away to better investment havens.
It's not yet known if the government has opened any formal line of talks with the militants, but it's not unlikely that some kind of informal talks may be going on behind the scene. The government knows it cannot afford another round of security crisis in the Niger Delta region, and so everyone believes it will do everything it can to ensure the Niger Delta Avengers do not go ahead with the threat. Deji Badmus, CGTN, Lagos, Nigeria.
And we're still in Nigeria. Smallholder farmers over there are exploring different techniques to increase their food output. Issues of climate change and insecurity are pushing a lot more agripreneurs to opt for soilless farming techniques, and that includes a focus on hydroponics. CGTN's Kelechi Mekalam has that story on Grassroots.
For 5 years.
Farm Lab's head trainer, Samson Ogbole, taking his students through a training session on soilless farming. The biochemist turned farmer started his agri-tech company in 2012 as part of efforts to bypass the seasonality of food production. Despite skepticism from various quarters, Samson's recorded success, and he's now raising a new generation of agri enthusiasts.
The first thing I had to overcome, especially when I launched out, was to get people to see, as they ask questions around, is this healthy? I actually had research work to show experimentally that this is healthy even in the lab. There were questions around, does this ensure food security? And looking at the 5 metrics of gauging food security, it meant all the 5. Then the next or the last part of the question, which is where we are right now, is how financially or economically viable is this compared to traditional farming? We are gradually showing people, yes, the setup cost may be higher compared to traditional farming, but a good business does not look at your setup cost, but rather the running cost. And considering that the running cost is way cheaper compared to traditional farming.
Hydroponic farming is a soilless technique of growing crops in nutrient solutions. Food insecurity has been at the center of conversations here. According to the UN Food and Agricultural Organization, FAO, no less than 9.2 million Nigerians are faced with a crisis of worse levels of food insecurity. The figures are expected to increase to 12.8 million by August 2021. Issues of climate change and insecurity, especially in the northern farming communities, have been disrupted. So for many, the hydroponic technique seems like a viable option.
I'm here to learn how to grow plants soillessly without soil, due to the fact that we have floods coming into our regions every other year for the past 4 or 5 years. So we're looking for alternative means to grow plants and how we can actually teach others how to grow their own plants, innovative way of farming. That way we can have enough food crops in our state. With what I've learned here, we could practically start growing tomatoes soillessly. We could actually elevate crop production.
Despite the unique benefits of the technique, there are problems of low awareness. Also, the system is limited to some crops like tomatoes.
The area where government should come out should be more of sensitization and exposing a lot of all people to hydroponics farming system. Through advocacy, capacity building, and support in terms of infrastructure needed.
Ogbole has spent the last 7 years training over 10,000 young agripreneurs. He believes that agribusiness is at the core of sustainable development and job creation, but technology-driven agriculture like hydroponic farming would drive the young Nigerians towards wealth generation. Kelechi Mekalam, CGTN Abuja, Nigeria.
Well, that story on hydroponics in Nigeria wraps up this edition of Global Business Africa. As always, we'd like to hear your thoughts on the content you've seen on the program in the last hour. Many ways to get your thoughts back to us, all of them on your screens right now. I'm Ramah Nyang in the Kenyan capital, Nairobi. Thank you for your company in the last hour.